What's up, YouTube, and welcome back to another video. It is man late right now. It's 11:17, but I did tell you I want to continue to put these videos out, continue to be more consistent with these videos. So I'm gonna get this out for you guys to have on your Saturday morning while you're scrolling through YouTube. But yeah, so I did not take a trade today. Today was Friday, the 13th. I did not see any setups across the board. So I just want to get out here, show you guys some market insights, tell you about my week, how everything went, and then just keep you informed on what's going on. Because a lot of us, we just focus more on a lot on technicals and less on fundamentals. But with me, I started with fundamentals first, and then switched over technicals. So I like to know what's going on. A lot of times you see these big moves happening in the market, and you don't know what's going on, what's affecting them, like what's influencing these moves. So I like to know, so I am prepared. Because if you stay ready, you ain't gotta get ready, and I like to know what's going on. But like I said, I did not take a trade today. I didn't see any setups. But we did. This is start. This is start of the week. We did come up filling this gap, and as you guys can see, we had some good price action throughout here. Um, what's this? Yeah, we had some good price action throughout here. But at the start of the week, it was choppy. It was choppy. It didn't really get good price action until middle of the week, Wednesday, Thursday, Friday is when you start to see the good price action. I am on the hourly scale onto the 15. It was choppy, not a lot of volatility. As you guys can see, some chop, some chop. This is not a market that I would want to be traded, but you know right now I'm on a 50K, so I am just trying to get through my 50K, get to my live account, get back to taking more payouts. But like I said, there's always something that's affecting the market right now. News has been crazy. Oil has been surging. But yeah, just a lot going on right now. A lot going on. So it would be best to de-risk on your trades. Take it slowly, one step at a time. You don't have to, speed through the process. For all of the new traders, I'm still new, but I just want to come out and just let you guys know that, bro, if you're gonna do this for the rest of your life, then there's no reason to, just like rush the process, taking shortcuts, bro. There is no shortcuts on anything that you do. So why are you trying to shortcut your way to success in these markets? So that's just something. But this is Nasdaq. As you guys can see, didn't really do much. Didn't have a setup. This is gold. I usually trade gold, Nasdaq, silver. I don't really do ES too much. But yeah, as you guys can see, the market just, we had some good price action, but nothing came back to fill. They give me something decent. Like, let me get rid of this. Like, if I was looking for a trade, I see we broke structure right here. This would be my, like, if I was to take another trade, something right here, like this zone, boom. Let me scale down. Oh, that's not even. I wouldn't even count this. Scale down again. Let me see. Yeah, this isn't nothing. But even if I were to trade something like this, or wait for like a retest, yeah, like something right here. Boom. I will wait for a price to come back up. Give me something right here. As in, where is this arrow? Yo, don't mind me, bro. I am crazy with this arrow. No, I don't like that. I don't like that at all. So, if this were me, when I see this move down, I would like to see a retest right here. Boom. See some like consolidation, or us come up, take out these highs. What highs are these? Like these highs right here. Boom, and then make its way back down on how it did. But I did not get that. How you get rid of this shit? Bro, this is why I don't use this shit. Alright. So yeah, that's something I would like to see, but didn't get it. I took two trades this week. So then let's go look at silver. Same right here. I almost took this trade. I will say today I did. I was gonna look for a trade during power hour, but then I realized. Say if we go to the 1 hour, bro. we'll say like boom. Okay, boom. This is market open, right? Once we entered the zone, my zone, we were already. This was 12 o'clock. I would say, just about 12 o'clock, bro. When we entered my zone, for me to like look for like longs or short or just kind of like see how market was gonna, because you see this is an extremely bearish candle, engulfing candle. So price continued to break structure, boom, right here to the downside. So I was obviously gonna look for shorts, depending on how we reacted inside of this zone. So once we entered the zone, let me see, boom. Once we entered the zone, we just started consolidating. I wanted to take shorts during power hour, but I realized volatility started to slow up. Not only that, once we got in here, it just started consolidating. We started playing around, but once we broke this, I would have took shorts, continue to the downside. But what stopped me from taking these shorts, were, like I said, market open right here, boom. We were already down. Price was already down. Let me go from right here. Price was already down 8%, right? And then I made this myself, my sessions. So, boom, what does it say? On average, bro, on average, 80, right? New York, boom, what does it say? 85, 85, 89, 85, 81. So we're already in that range of price. Like, this is what stopped me. This is literally what stopped me from taking this trade. Once I turned this on and I realized, bro, we're already down 8%. Like, the average, this thing moves 80, 85, 85. Like, how much more do you think the market's going to continue to fall without buyers stepping in? Either buyers stepping in during power hour, giving you a strong reversal, or price just consolidating, which price did exactly that, which was, turn that off, consolidate. So that's what stopped me from taking this trade once we crossed through the zone. So that's that. That's silver. I think I showed you basically all of them. So yeah, I trade silver, gold, Nasdaq. So now to the market insights. Basically, I got this whole thing right now. From when market opened. Market opened Monday, as you guys can see right here, 6,699. My bad, bro. I'm shot. We opened there. We closed at 6,795, which indicated basically market behavior, a strong reversal rally. It could just be just based off of news, whatever was going on. If Trump posted a tweet, if just the war and stuff going on. So basically, this is the whole snapshot of everything that happened this week from Monday to Friday. I'm not gonna fly through this. So overall, and I'm not gonna really go through all these numbers. You guys can see. You guys can judge for yourself. But yeah, this is everything that happened this week overall. Where the index declined. This right here is for the S&P. This is for the S&P 500. Decline for the week. Finished around 6632, about 1.6% for the week down. That's not bad. Nothing too crazy. So there's that. Basically, what the factors that were moving the market this week, obviously, as you guys know, with the war going on in Iran, oil prices continue to spike, continue to jump above 100, goes back down to 79, 78, whatever it is, 80 dollars a barrel, and then something comes out, a tweet gets posted, causes ease in the market, oil prices fall, then the tweet gets deleted, boom, now everybody's back in fear, and oil shoots back up to above $100. So with that going on, rising, obviously, as you guys can see, rising energy costs, increased inflation fears, and pressures stocks to go lower. So that's why you see the market on a downtrend basically recently in the market, and the huge drop that we've seen today. Why markets are carrying, because higher oil equals higher inflation. Higher inflation equals fewer interest rate cuts, and with that means cash becomes, I wouldn't say tighter, but I don't want to get this wrong. Like I said, I'm still learning myself. I don't know it all, but that's why we are here documenting this, putting this stuff out. Just you guys do your own due diligence. Like I said, I could be wrong, but I just want to let you guys in on a little stuff that I know and that I am seeing. But yeah, fewer interest rates higher inflation equals fewer interest rate cuts. Some more news that's affecting the market. Banks like Barclays push back expectations for rate cuts to September instead of June. Investors now expect fewer rate cuts just overall, just because of everything that's going on. And then the market impact was higher rates for longer equals bearish for equities. Weak economic news data signals slower GDP growth, and then job losses for February. Inflation still stubborn, and this combination raised stagflation concerns and slow growth plus inflation. For people that don't know what stagflation is or never heard of this, I'm going to show you right now. Stagflation. Boom. Stagflation is a rare, severe economic condition characterized by the combination of slow growth in the economy, high unemployment, and high inflation, especially with, as you guys know, the rise of AI coming out. A lot of people are losing their jobs because they're getting replaced, because they're finding, CEOs are finding better ways to deploy capital, and they're looking for better ways to deploy capital to get rid of employees. You know, if you get rid of an employee, you don't have to pay a 401k. You can continue to run a robot. Everything becomes more efficient and things run a lot smoother. But you know, we are years away from that actually, you know, coming into play for real. But they're taking the risk now, investing heavily into AI, into these chips, and you know, just into their business. So that's basically everything that's been going on throughout the week. Let me know if you guys like these videos. I'm going to continue to do this, continue to show you guys my trades throughout the week. And then on Fridays, continue to give you these insights on what I think is happening. And like I said, you guys do your own due diligence, and you know, or just take it with a grain of salt. And continue to trade, continue to de-risk, continue to, you know, follow your rules. Just because, you know, the times that we're in, a lot of volatility, a lot of ways, not a lot of ways, but you know, a lot of opportunities to make some money, and that's what we're in this for, you know, to make some money. So yeah, just, you know, stay disciplined, follow your rules, stick to your game plan, and just take A+ setups, you know, because just like you can make money in these markets, in these volatile markets, you can also lose a lot of money in these volatile markets, just because of the whiplash that the market has been doing. And last thing you want to do is be in something like this, or like the beginning of the week. Let me see, something like this. Something like this where the market will give you your setup, but then trap you. Last thing you want to do is become a trap buyer, trap seller in these markets, and then now you're sitting there watching your trade for an hour, 2 hours, 3 hours, because it's just whipsawing back and forth, and then you don't want to get out because you're in fear that the market's gonna rally without you. So you know, trade accordingly. Do what you got to do. Stay disciplined. Stay locked in, and this is your year. Peace. I love y'all, and I will see y'all in the next video.